If you love giving away your hard-earned money to the taxman, then feel free to click away. But if you rather keep more of what you earn and stop overpaying thousands in taxes, then stay with me, because this video could literally save you a fortune. It could save you thousands of pounds in taxes in the next few days. Now, the tax year ends on April 5, and once that deadline passes, any tax break you didn't use, they are gone forever. I've seen doctors and healthcare professionals lose thousands, 5,000, 10,000, even more, simply because they weren't aware of tax-saving opportunities. So today, we're covering eight of the biggest tax traps that I've seen doctors and healthcare professionals fall into every single year, and exactly how you can fix them before it's too late. You stick around until the end, because I will also share a bonus tax hack that has helped hundreds of medics reclaim thousands in overpaid taxes. Now, I've seen thousands of doctors and professionals in our Moneywise Doctor community fix simple tax mistakes and reclaim thousands in overpaid taxes, but I've also seen the other side, people losing out just because they didn't take action in time. Here are some real-life examples from members of our Moneywise Doctor community. Number 1, Dr. NK, NHS consultant, saved over £13,000 by just restructuring her pension contributions. Again, there was Dr. Uche, very cerebral NHS GP, claimed nearly £10,000 in tax relief that he never knew even existed. And of course, the affable Dr. Ruth, who is a psychiatry doctor, sent us this amazing message last year. Thank you, Moneywise Doctor. I've claimed nearly £9,000 in tax relief. That sounds like music to my ears. But not everyone wins. For instance, one doctor, Dr. Soma, lost out over £5,000 because she saved her deposit for her home in a regular account instead of a lifetime ISA. And by the time she found out, she was already buying her first house and was now over 40. So, moral of the story, you either take action now or you leave money on the table. Let's get right into it. Now, before we dive in, do me a quick favor. If you're really serious about learning how to build your financial freedom, save on taxes, keep more of what you earn, hit that like button and smash the subscribe button so YouTube knows to send you more of my content. It takes a second and it really helps out the channel. Plus, it tells me you're really serious about keeping more of what you earn. Should we take a second and just do it? I'll do it with you as well. There you go. Done. Awesome. Now let's jump right in. Before we crack on, in case we haven't met, I'm Dr. Andy Egwim. I'm an investor and the former salaried GP, NHS GP. I'm the founder of Moneywise Doctor, a platform that has helped thousands of doctors make smarter financial decisions. Now, after years of overpaying tax, I decided to take tax efficiency more serious, and that helped me, including my investing, to achieve financial freedom and leave my 9 to 5 3 years ago. But this video is not about me, it's about you. Most people don't realize how much tax they're overpaying until it's too late. And once April 5 comes and goes, there's no going back. A quick disclaimer, I'm not a financial advisor or tax accountant. I'm just a doctor, an investor who spent years figuring out how to legally keep more of what I earn and make my money work harder than me. So this video is only for educational purposes only. So if you need tailored advice, you speak to a professional. Now let's get right into these 8 tax mistakes that could be costing you thousands. Number 1, not checking your tax code. You could be overpaying. Most people never even check their tax code, but this is one simple mistake that could mean you're overpaying tax every simple month. How to fix this? Check your latest payslip or HMRC account online. If your tax code looks wrong, if you're seeing funny codes like DO, emergency tax codes, contact HMRC or speak to an accountant to get it corrected before April 5. Example is a pediatric consultant in our community who found out that for 6 years she was being paid using the wrong tax code, and when she corrected it, she got refunded several thousands of pounds. It pays to check. Number 2, not claiming tax relief on professional expenses. Are you claiming back your GMC fees, indemnity, insurance, BMA, CPD courses, exam fees, work-related travel, even replacing equipment? This could add up in several thousands of pounds, especially when you consider the fact that you could actually claim 4 years back, including the current tax year. So don't wait till April 5, fix it now. If you're not sure how to start, we made a simple step-by-step guide PDF you can download with an accompanying video that can help you claim several thousands of pounds back. I've already given an example of doctors who've actually done this. Number 3, missing out on your 20k ISA allowance. So as you know, ISA is use it or lose it. It doesn't roll over. If you don't use your 20k tax-free allowance by April 5, it's gone. Whether it's cash ISA, lifetime ISA, stock and shares ISA, maximize it. If you're not sure what to do, you may consider putting your money in the cash ISA until you decide how you want to invest it. And remember the lifetime ISA, if you're under 40, you can still claim the £1,000 government bonus before the tax year ends, but it's just for your first home or for retirement. Again, if you want to learn about ISAs, just comment ISA and I'll share the link. This could save you several thousands of pounds, not just in your taxes and pensions. Have you fallen into the 60% tax trap as a doctor or healthcare professional without even knowing? It's crazy. I know you think the highest tax you can pay is 45%, but here's how it works. If your income exceeds 100,000, you start to lose your personal tax allowance, and by the time you hit about 125,000, you've lost your entire tax allowance. This means you're paying an effective tax rate of 60%. That's not good. You lose a lot of other benefits with it. Now, if it's something you've never thought about or you're worried you're not sure how to navigate it, you're in luck, because I've written a very clear guide with a 10-point checklist that you can use to avoid the 60% tax trap. One of the biggest ones is obviously paying more into your pension, but there are 9 other steps you can take. Check the link in the description and download it for free. Let me know if it helps. Let's jump right back into the episode. Number 4, not maximizing pension contributions. So pensions are one of the best legal tax shelters in the UK. Yeah, most people are not even contributing enough. You have £60,000 annual pension allowance, which includes pension from both your workplace or any private pensions you have. And if you contribute more to your pension, you can drop into a lower tax bracket and reduce your tax bill, and also boost your retirement savings with tax-free growth. But something to really watch out for, you want to make sure that you're not crossing the £60,000 annual allowance, because this could make you land with a penalty. If you're not sure how to start, you can download our free SIP guide. It's a self-invested personal pension guide that can help you figure out personal private pensions if it's something that could help you. And if you're unsure, speak to a financial advisor. Number 5, falling into the 60% tax trap. Now, I've been speaking about this for over a year now, but if your adjusted net income crosses a certain amount, £100,000, you start losing your tax-free allowance of £12,570. That means that for every extra £2 you earn above that 100,000, you lose £1 from your tax-free allowance, and you'll be paying an effective tax rate of 60%. By the time you hit 125,140, that's the magic number, you've lost all your tax-free allowance and paying an effective rate of 60%. Again, a few things you can do is to consider reducing your taxable income by making additional pension contributions. I've done a free guide explaining all about how to avoid the 60% tax trap, and it's very popular. It's been downloaded by thousands of doctors and healthcare professionals. If you want it, just comment in the comment section and request it, and we'll share the link, or check the description to download it for free. That can help you through the process. And of course, if you have any questions around how to avoid the 60% tax trap, I'm more than happy to answer them in the comments. Number 6, ignoring capital gains and dividend taxes. Now, you might not know this, but whenever you buy and sell an asset like a stock, crypto, even houses, and you make a profit, you owe the government money. It's called capital gains tax, and it's quite sizable. However, there's a CGT allowance, which if you make any gains below that amount, there's no tax there. Unsurprisingly, and a bit painful, the CGT allowance has continued to be reduced by the government over the last few days. In fact, over the last few years. In fact, it's dropped from £12,300 in 2022 tax year to £3,000 now. So one way to fix that, use your ISAs, use your SIP to sort of like do tax efficient investments. So there's no tax on investment done in the ISA. Number 7, not planning for inheritance tax. If your estate is worth over 325,000, that's 600k for couples, your family could lose 40% to inheritance tax. You can fix it now. You can use gifting allowances and put assets in a trust, like something like your life insurance. You can put it in a trust to ensure that payouts are not taxed. You can even consider things like spousal exemptions, and of course pension planning. Speak to a competent advisor if you need help in this. Right. If you've come this far and you're enjoying so far what you've been learning, feel free to hit the like button and the subscribe button. Now let's go over to the final one, which is number 8. Number 8, drum roll if you've gotten to this point, is exceeding the 60k pension allowance. Now if you exceed the pension allowance, it can trigger a tax charge, and many high earners unknowingly exceed this limit due to pension growth and additional pension contributions. There are a few things you can do. Check your total reward statement to calculate your pension growth. Use your carry forward if you haven't maxed out the past 3 years allowances. And of course, speak to a financial advisor or a specialist tax expert if you need help. Now, if you fix these things before April 5, this tax base, they can actually help you. So you don't wait till April 5 when it disappears, or you might risk leaving money on the table. Now, we're going to do something. If you want a deep dive into these tax areas, join my Tax Hack X-Ray Challenge for doctors and healthcare professionals. It will be a 2-hour session where we use a fine-tooth comb to go over all the tax areas and more and compare lists, checklists before April 5. As it's quite an in-depth session, we can only accommodate 30 medics to make it effective and to make it useful. So if you want to be offered a place or a slot, you need to act fast and join the rapidly growing waiting list. So if you click the link in the description or comment to join the waiting list, you'll get the link to join the waiting list. And of course, like and subscribe if this video has helped you, and drop a comment on which mistake you've fixed. I'm more than happy for you to share the video as well, and I'll see you in the challenge.